My fellow investors, business enthusiasts, my fellow Jamaicans, everywhere you look this week, the financial headlines are screaming the same thing. Bitcoin is bleeding out. We're talking about a massive drop. Over 40% wipe off the table since those crazy all-time highs of over 126,000 back in October last year. Now, if you're holding crypto, I don't know what to tell you. It's been ugly, and trust me, I know the feeling. Like me, you're probably trying hard not to look at your phone right now. But what if you're not? What if you're sitting in Kingston, or Mandeville, or Ocherius, looking at your portfolio of solid local stocks, maybe some government of Jamaica bonds, and thinking, "Whew, man, thank goodness I stay away far from that digital casino. This crypto crash has nothing at all to do with me." Well, I hate to rain on your parade, but you might need to check your assumptions at the door. Today, we need to talk about the uncomfortable reality of modern finance: contagion. We need to discuss why a massive rectangle on a Bitcoin chart in New York or Tokyo has invisible strings tied directly to your investment account right here in Jamaica, even if you never own a single fraction of a Bitcoin. If you want more videos like this, please hit that like and subscribe to the channel right now. It will really help our community grow. Plus, you will receive notification when we release more content like this in the future. Now here's the crux of the situation. In 2026, Bitcoin is not just some niche internet money anymore. For better or for worse, it has become a global canary in the coal mine for what professional investors call, quote-unquote, risk sentiment. Think of global finance like a giant faucet. When investors feel brave, optimistic, and flush with cash, like they did in the late 2025, the faucet is wide open. This is a risk-on environment. Money pours into everything: speculative tech stocks, real estate, Bitcoin, and yes, emerging markets like Jamaica. A rising tide lifts all boats, even the risky ones. But when something as big as the entire crypto market sheds over $2 trillion in value in just a few months, that faucet gets turned off. This is a risk off. Fear becomes the dominant emotion. And when the big global investors get scared, the first thing they do is to pull their money out of anything they consider risky and retreat to safety like US Treasury bonds or gold. Unfortunately, on the grand global stage, the Jamaica Stock Exchange is considered a riskier asset class compared to the S&P 500. When the global appetite for risk disappears because crypto is cashing, foreign capital that might have been eyeing our local blue chips hit the pause button. Less buying pressure globally means flat or falling prices locally. Furthermore, we have to talk about liquidity. The massive hedge funds and institutional players in North America and Europe now hold significant amount of crypto. When they take a 40% haircut on a $1 billion position, they get margin calls. They need cash immediately to cover their losses. And here is the painful truth. When giant funds need cash fast, they don't sell what they want to sell. They sell what they can sell. They may have to liquidate perfectly good, profitable positions in traditional markets just to stay solvent. that massive wave of forced selling drags down the entire S&P 500 or the Nasdaq. And as we know too well, when the US stock market catches a cold, Jamaica often catches a flu. You might see your portfolio of cross-listed stocks or Jamaican financial giants dip, not because their business is bad, but because some hedge fund manager in Connecticut over-leveraged on Bitcoin and has to sell everything else. There is also a very direct, localized pressure point that often goes unseen. The Jamaican investor who is, quote-unquote, playing both sides. We have a growing number of local traders who use their Jamaica Stock Exchange portfolios or other traditional holdings as a safety net while they trade highly leveraged Bitcoin positions on international platforms. When Bitcoin dropped 40% in a matter of months, those leveraged positions face massive margin calls. To keep those trades from being forced closed, these investors are often forced to sell off their stable Jamaican blue chip stocks or liquidate their local mutual funds just to move cash into their crypto accounts. This now creates an unnatural selling pressure on the JSE, where you see high quality local stocks dropping in price for no apparent business reason, simply because they are being used as an emergency ATM to save a failing crypto trade. So no, you don't need a digital wallet to feel the heat of a crypto winter. It changes the temperature of the entire financial room. But here's the takeaway. Don't panic. This contagion is usually temporary. If you own solid Jamaican companies with good cash flow and strong dividends, their intrinsic value has not changed because Bitcoin crashed. In fact, if global panic drags some local companies down, that's not a disaster. That's a buying opportunity for the smart local investor who focuses on fundamentals over fear. I want to hear from you in the comments. Are you seeing this global risk off vibe affecting your JSE holding yet? Let's talk about it. Thanks for watching, and click the link on screen now to watch another Jamaican financial content. Catch you in the next video.